Hello and welcome back to the channel. Bitcoin is just 3% from all-time highs. It's broken out of its channel, it's tested its support, and it looks primed for an upside move in the coming days. At the same time, there are two huge stories brewing on social media. The first one impacts crypto directly. The second one has a major impact on the global economy. So I thought I'd jump on and explain both. The first story relates to Senator Lummis. Senator Lummis has always been pro-Bitcoin, pro-crypto, and a huge fan of digital assets. She recently became one of the major driving forces in Washington behind the Bitcoin Strategic Reserve. And she is the leading voice for the Genius Act, which was approved for vote by the Senate last night. The Genius Act is all over social media, but what impact will it have on crypto? That's what I thought I would jump on and explain. As you can see here, Senator Lummis says the Genius Act is pro-innovation, pro-consumer, and pro-America. And America needs the Genius Act. So let's talk about what the Genius Act is and what impact it will have. Now, I'm not going to read this entire page, but basically the Genius Act is a consumer protection bill, and it's all about stablecoins. It's all about giving proper regulation to stablecoins. The Genius Act basically gives regulatory approval for stablecoins in the US, but the main impact of the stablecoin legislation is this part here, where it says they need 100% reserve backing with US dollars or short-term treasuries. That means that every time Tether or Circle or these soon-to-be new stablecoins like the JPM stablecoin, the Goldman Sachs stablecoin, I'm sure there's going to be hundreds flooding the market very soon. They have to be backed by short-term government debt or physical dollars held in the bank. Why is this so important? Well, if you've been paying attention to anything, you know the US government yields are out of control. The 10-year yield is up back at 4.5%, and that makes government borrowing very expensive. The Genius Act means that Tether will have to buy short-term government debt, which means that there's a constant buyer of that short-term debt. On top of this, they have to disclose every month their reserves. They have to show their treasury. They have to show that every time they've minted a USDT, they also have a physical dollar or a short-term treasury that covers that $1. Ultimately, the US is creating new buyers for its debt. There is no traditional buyers for government debt, which is why yields are spiking. The Chinese have started offloading treasuries. The Japanese can't buy any more, and they're struggling with their own currency. And no corporate institution wants to hold government debt because they know inflation reduces the returns over time. And actually, a 4.5% yield is worthless when you factor inflation is going to be above 3% for the 10 years you hold the bill. So they're going to tie this legislation to stablecoins. And why is that important for the crypto market? Well, if you think about countries around the world, everybody wants dollars. You go to Egypt, they accept dollars. You go to Nigeria, they accept dollars. You go to Argentina, they crave dollars because their local currency is so weak. They want paid in dollars, something that holds value over time compared to their currency. In some of these countries, their currency changes value within hours, never mind about weeks or months. So the dollar is some form of holding value that they can't get in their own currency. However, they can't transact in dollars in their country. They can't pay their taxes, their bills, their rent, their mortgage, their car payment in dollars. They have to pay in the Egyptian pound or the Argentinian peso. That means that the dollar black market is huge around the world. But this stablecoin legislation, in my opinion, is going to make stablecoins legal worldwide because what America does typically translates into other countries very fast. By regulating stablecoins, the US knows it's going to create worldwide demand for digital dollars. Worldwide demand for digital dollars means that there's a constant buy pressure on government debt, and that'll drive yields much, much lower, which means borrowing costs go way, way down, which is great when you're a country like the US with a massive debt problem. And this is why the Genius Act is so important to the US and also to crypto. Now, if you've been following us for a while, you've seen this chart before. This is the dominance of USDT and USDC, the two main stablecoins. As the market caps of both these stablecoins rise, that means more stablecoins. But when the dominance starts to drop, that means people deploy those stablecoins into crypto. And we normally see a massive Bitcoin run when dominance drops. So this means more stablecoins in the market, more buyers of stablecoins equals more buy pressure for crypto and Bitcoin. But there's another advantage to stablecoin regulation, and that is that gives the US government authority to print more money. USM2, the money supply in the US, is going to go ballistic. The only reason it's not exploding higher right now is because of the yields. The yields mean they can't print, they can't lower rates, and they can't do QE because the refinancing costs are too high because of yields. As soon as yields start coming down, M2 is going to explode. So you've got double pressure on Bitcoin, crypto, and it's all driven by stablecoins. And that's why the Genius Act is so important. Okay, so the second story that is dominating social media right now is all about the Japanese borrowing rate. The 30-year yield has reached an all-time high, the highest level in history at 3%. Japan has a debt to GDP ratio of over 200%. And the Japanese government has been buying its own debt for years and now owns 52% of all bonds issued by the central bank. Japan is a country that's always faced deflation, not inflation. So they've been able to print loads of money, buy their own debt, to try and actually stimulate some inflation, to try and stimulate their economy for decades. But just recently, that turned into inflation. They now have inflationary pressures, a massively aging population, and now they have the highest borrowing costs ever. So you might be thinking, why does this matter to me? And why does it matter to Bitcoin? Well, there's two problems here. One, a lot of investors, hedge funds, big banks, they borrow yen and convert it into US dollars. They then buy dollar assets with that money because Japanese yen was trading at 1% or 0% for ages. So it was a really nice spread and they could make a lot of money. Japanese investors don't want to invest in their own debt because the rates were so low. They hovered around 1% for years. So they invested abroad as well. On top of this, the Japanese government is one of the biggest foreign holders of US government debt. So as this yield rises, investors are going to have to pull their money out of US assets. They're going to have to sell US assets to pay back the loans because they can't handle the rise in interest rates. Okay, so the first group of people that borrowed yen to buy US dollar assets, they're going to have to sell the US dollar assets to pay back the yen loans because the interest rates now make it not a profitable trade now that they're up at 3%. The second group, the Japanese investors that invest abroad, why would they invest abroad and risk the currency risk, the rate risk, and all the other issues that come with investing abroad when they can get 3% at home? They're just going to repatriate that money and invest at home. This poses a massive problem for the US stock market and, of course, for the US Treasury market. More sell pressure on government debt is going to lead to higher yields on government debt. So what is the solution and why does this impact Bitcoin, crypto and the economy? Well, obviously massive sell pressure across the stock market and US government debt is going to be horrific for any investor. This is one of the reasons I think we're seeing so much institutional and worldwide demand for Bitcoin. People realise it has no counterparty risk. People realise that Bitcoin isn't reliant on a government or central bank, and it doesn't matter what rates are doing. It doesn't matter what yields are doing. It doesn't matter what the Japanese are doing, the Chinese are doing. Bitcoin just continues to perform regardless. But for me, the biggest thing is the Japanese government is now backed into a corner. They have two options. They either let the yield run wild and run higher and higher because there's no demand for Japanese debt. Who's buying Japanese government debt when you know they're going to inflate the currency and they have the worst debt to GDP problem in the world? So the Japanese government is more than likely going to have to step in and buy more of their government bonds. That means a weaker yen and it means they're going to control the majority of their treasury market. They likely are going to go back to what's called yield curve control, where they buy bonds when they exceed a certain level. This is huge for Bitcoin because this will flood the market with liquidity. We're going to see global liquidity rise even faster. It's bad for Japanese citizens, it's bad for Japanese savers, and it's terrible for anyone holding the yen. But I do think the US might bail them out with some swap lines. They give them loans of dollars to protect the yen so that it doesn't absolutely crash. The governor of Japan described the situation worse than Greece when Greece collapsed in the early 2000s. Overall, there are two major stories at play. Both are bullish for Bitcoin. Both are bullish for global liquidity and crypto. And I believe we are on the precipice of a new all-time high for Bitcoin. It's coming in the next few days. I can feel it. And global events like this just give you even more reason why you should be bullish on Bitcoin long term. Governments around the world are losing control of their debt market at the same time where they need to print and borrow even more to cover the entitlements they have, like healthcare, pensions, welfare, things like that. Governments are in a doom loop. They're in a debt spiral and there is no way out. That's why Bitcoin, in my opinion, is going to over 200k in the next 12 months. That's all for just now. I just thought I'd jump on and explain both those stories, help you understand what is going on, why there's so much chaos on social media about the Japanese bond and the Genius Act. Hopefully, we'll be back with a live stream celebrating all-time high very soon. But for now, I will catch you very soon.